Well, markets got another green flag overnight to keep on charging up, maybe for the rest of the year, after we received a second US inflation report showing prices are falling closer to the US's central bank's target. My name is Jessica Amir. I'm a market strategist here with Mumu, and it's great to have your company on this terrific Friday, the 13th of June. Good to see you. So traders, they got a bit more assurance last night that the Fed, the US central bank, could cut interest rates twice this year if the US economy slows and needs a lifeline. This is why investors are even more bullish on stocks, gold, and high risk assets, including cryptocurrencies, but crypto is seeing some profit taking. But to prove this point, it's really worthwhile to note that we did see these themes play out, excluding what we just said about crypto. Gold nudged closer to its record all time high. It's 1% away from its record closing high of $3,500. That's US. Secondly, US stocks moved up. The NASDAQ 100 is now just 1% away from its record level, while the US dollar has continued to swing down. It's hit a new 3-year low. And we saw broad buying across most of the S&P 500 sectors. What sectors saw the most love and light? Well, I'm glad you asked. I'll tell you, it was tech and defensives, but an interesting take on defensives. The defensive sectors that rose overnight were utilities, and they were led by uranium companies. Specifically, when we talk about uranium, remember we're talking about companies like what we're displaying on the screen: Vistra Energy and Constellation Energy. And as we can see, Vistra Energy was a standout. Their shares rose about 4% overnight, while the larger of the two, Constellation Energy, rose about 3%. Now, these companies, remember, they're heavily used by many of America's data center companies. And in fact, these companies power 30% of the US grid. And as we can see on the screen, for those that are tuning in on the podcast, Vistra shares are now up about 30% this year. And if you believe what we've been saying and what the broad street is saying, there is more love to go for these stocks. So keep your eyes on those. What else were investors buying overnight? Well, they were buying heavily into technology stocks. We're flashing on the screen Oracle. Oracle shares seeing a remarkable 13% lift overnight, taking this year's gain to 44%. We saw Oracle leading the gains in the tech space. And when I say leading the gains in the tech space, I'm talking about other companies that followed Oracle higher, such as computer chip companies such as ON Semiconductor and NVIDIA, following up, not seeing as cracking as gains as the one that we're displaying on the screen, Oracle. But broadly, why are we talking about this? So data centers rising, chips rising. Well, basically, it seems that in sophisticated investors, they're diversifying their portfolios. They believe what Oracle is saying. They believe that artificial intelligence demand for cloud infrastructure is just at the beginning of the cycle. And we saw this again with Oracle being another AI chip or AI player, guiding for a 70% jump in revenue in the year ahead. Now, again, this is another company saying we need a lot of we need a heck of a lot of I guess, the critical stuff to build out these data centers. So that's why we need semiconductors, we need resources to build them, and we need companies to keep the lights on, which is why we spoke about uranium a little bit earlier. And rounding it all out, we are also seeing other commodity prices move higher, such as aluminium. Of course, aluminium needed in building chips and data centers. Changing pace, here's a look at the best and worst performers of the week so far in the S&P 500. Pardon me, sorry. This is another illustration of the themes at play here and what we're talking about. So this week we can see Oracle center stage at the top of the screen. Oracle, the best performing stock in the S&P 500. Second takeaway here, energy companies. They're also on the rise. And that's obviously because demand is rising again for energy, not just the carbon neutral companies that we spoke about, i.e. uranium. But second of all, the company that we're flashing on the screen is Conoco. ConocoPhillips, a very large oil company. But also, rounding out this discussion, we can see that chips are making a comeback, and so too are gold stocks. We can see that the world's biggest gold stock in there, Newmont, as you can see, they are one of this week's best performers in the US. They're up about 7% Monday to Thursday. All in all, I guess this is just another reminder for investors. Consider these major themes, just rinsing, repeating what I'm saying a little bit differently, just to really drive it home. AI, energy, and gold. And this really sets a bullish setup for stocks across the Asian Pacific and Australia today. Now, speaking about Australia, the Aussie share market is expected to nudge up about 0.4%. What does that mean? Big deal. Well, the market will hit, if this happens, 8,605 points. Now, what does that mean? Well, it means that we will erase yesterday's drop, and the Aussie share market will rise for 5 straight weeks. And we should be closing off the week with a market size. The entire Aussie share market, the ASX 200, has got now a market valuation of $3 trillion US. Doesn't seem like much, but it is significant for Australia. Now, let's have a look at the best and worst performers in the Aussie share market, specifically the ASX 200. We can see that tech companies are leading the charge this week. Zip is the best performer. Its shares are up 22%. And the other key takeaway here is that it's not on the screen because they're not the best performers this week across our 4 trading days, but it is worthwhile to give an honourable mention to gold stocks. They were the top performers yesterday on the ASX, and you bet your bottom dollar they'll probably make a run for it today, given what we saw overnight with Newmont. And indeed, Newmont is shining globally. So you'd expect a Newmont on the ASX to also do well. Second, or rather, third takeaway here: energy-related stocks are on the charge, or on the surge again. You can see a coal stock here that goes by the name of Yancoal. Why is Yancoal doing well? Well, coal prices are up, and obviously Australia's grid is powered by dirty coal. I say dirty, you can call it otherwise, but it's a fossil fuel metal, isn't it? And this is powering much of Australia's energy grid. And of course, this is needed to keep Australia's data centres running. But we spoke about, at the beginning of this discussion, we spoke about uranium technology and AI related stocks, and gold continuing to do well. And I suspect that this theme will continue to play out. Yes, even though Australia is not using uranium to power our grid, it should be something for you to consider. And that's the daily. We'll see you for a look at a deeper dive into what you need to consider for the weekly. Stay safe, happy trading. Thanks from all of us here at Moo Moo.